Hello, chart watchers, and welcome to this Friday, March 8th, 2019 Market Watchers Live Show with your hosts, Tom Bowley and Mary Ellen McGonagle. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's take a look at what's going on in the market. It's another down day so far. We got the Dow Jones Industrial Average down 130 points, the S&P 500 down 18.5, the NASDAQ down 46, and the Russell 2000 down 6 2/3. 10-year Treasury yield looked to be breaking down earlier today on a not-so-favorable jobs report, but it has bounced back. We've seen the yield bounce back, and it's now flat on the session. The VIX continues its uptrend. This is now 5 days in a row that we have closed. Well, if we close higher today, that will be 5 days in a row. And, of course, anytime that VIX is on the rise, you got to be careful in equities, and that is certainly the case currently. Consumer staples and real estate, two defensive groups, as you might suspect, on the top of the sector leaderboard. That's not unusual when the market is selling off. Definitely money rotating, looking for some defense. And to the downside, though, crude oil prices hitting a rough patch here of late, and that is not helping energy. Also, the dollar has strengthened in recent sessions, not helping energy. So you can see the XLE down another 2.5% today. This has been a rough week for energy. Consumer discretionary also dropping below its 20-day moving average, showing some relative weakness today. A couple of stocks in the news over earnings. Marvell Technology, not so good, down almost 3%, although after hitting some recent support down near $18, is trying to bounce back. On the positive side, though, is Costco. Costco came out with very strong earnings on their bottom line, stock gapping up, and you can see clearly taking out prior highs in 2019. So Costco having a good day, up a little over $11 so far on the day. All right, Mary Ellen, first of all, welcome back. And
Thank you.
It's been a long time since we've been able to talk about what's not hot.
Unbelievable. Going into this week, the NASDAQ was on its 10th week of upward action. And certainly, yes, we are seeing a break in that across the board this week for the most part.
Yeah, I think everybody's question now at this point is this just a pullback? Is this buyable? Or is there more to come? And that's going to be the million-dollar question for just about everyone. Do you have any thoughts on that?
Yeah, that's actually the question. You're absolutely right. It's going to be all about paying attention to the technicals here. Do the markets find support at their key moving averages and individual stocks as well? We are seeing a little bit of bottom fishing. We'll get into that, of course, as some of these stocks start to hit these key moving averages and key areas of potential support. So it's,
we got a
critical juncture.
Yeah, lot to go over today for sure. And as we said, this will be the first time in a while that we spend more time on the what's not area of the market, what's not hot as opposed to what's hot. But let's go ahead and jump in because we got a full docket today. And first, we'll go over the upcoming schedule. Of course, Tuesday, Erin will be back on Monday, but Tuesday she'll be doing a workshop. And then Wednesday, we will have Linda Raschke joining us. So that's something to look forward to as well. As far as today's agenda, what's hot, what's not, with a little bit more of a flavor on the what's not side. So we'll have that. We'll be going over that. We'll start the 10 in 10 at about 10 till 1. And our first stock will be Marathon Oil. Take a look at that chart. See if you agree with the annotations that I provide when we start the 10 in 10. Of course, we'll do 9 other stocks after that. And then we're going to add a new segment. And this was Mary Ellen's creation. I thought it was great. This stock or that stock. And essentially what we're going to do is we're going to give the other 2 stocks. Might be in the same industry group, could be similar scooter rankings, could be whatever. But we're going to give 2 stocks, and the other one's going to have to come up with which one they'd pick. So, I think as we go through these, you'll be able to take a look and follow along and see if you agree with us. So with that, let's go ahead and get started. We do have a ton of economic reports out today. Of course, the big one, and it was a shocker, February non-farm payrolls. After the ADP report came in on Wednesday, a little better than expected. I don't think too many folks were expecting such a big miss on February non-farm payrolls. I believe that this was the worst number we've seen since September 2017. February non-farm payrolls, 20,000 versus the anticipated 175,000. February private payrolls, not much better. The unemployment rate did dip 3.8% versus the anticipated 3.9%. And February average hourly earnings rose 0.4%, versus 0.3%. January housing starts better than expected. Building permits also better than expected. So when you consider all that, well, not very good. But let's take a look at what's going on in the bond market. And, you know, when I look at these numbers, kind of the worst scenario for the stock market is slowing growth and increasing inflation. Now, this is just one report, and I don't think we should just be gleaning too much from one bad report, but there's no doubt this was a bad report today. Has the market been pricing it in? I don't know that the equity market's been pricing it in, but I can tell you the bond market has. 10-year Treasury yield has not been rising in 2019. And in fact, with this news, we were trading at about, the yield was down at about a 10-week low when it hit 2.60%. Now, I brought up this long-term 3-year chart because I wanted to annotate and just show you that the long-term trend in the 10-year Treasury yield, in my opinion, is still higher. But this is a pretty key area, I think. You've got the double top from back in 2016, 2017, right at around that 260 area. We went down just below it at the beginning of the year and came right back up above. And you can see all of these lows over the last 10 weeks have been right at about this 260 area, including today's. So I think we're at a key pivot point, key possible turning point in the 10-year Treasury yield. I wanted to mention this from a long-term perspective because what you want as an equity trader, if you're on the bullish side, is you want money rotating out of treasuries, out of the defensive treasuries and into the more aggressive equities. And the way it happens, the way you see it on this chart, is the yield to be rising. When the yield rises, it means the treasuries are being sold. So right now, this has been a warning sign for a while. We've talked about it on the show. I think even though it was a shocker to see those numbers on the employment report, I think the bond market's kind of been saying this for a while. It's been telling the Fed to put the brakes on, that economic strength is not what the Fed thinks it is. And I would have to say the February employment report bears them out. All right, let's get back into the earnings because the earnings, there were still quite a few out, a couple big ones. Costco reported. There's the numbers. I mentioned them top of the show, $2.01 versus $1.67. That's a huge beat on the bottom line. Marvell, not so much, though. Missed, lowered guidance. Stock down today. OKTA, this has been one of the hot software stocks in that cloud area, and they did beat on the bottom line, but they had their own little bit of mixed message going forward. Stock was down earlier, but has recovered. Vail Resorts, really nice report. Big boost in their dividend today. And then Big Lots coming in with a nice report there this morning in terms of their bottom line. Now, how does all of that relate in terms of the response in equity prices? Well, Costco, first up. You can see the big move here. We had been trending higher. When you take a look at its peer, though, it had actually been trending below its peers and been downtrending. I think this could be a break for Costco to the upside in terms of starting to show some relative strength. So I like what's happening here. I also like the fact that it's already traded 4 million shares, and we're not even the halfway point of the day. So not only are we gapping up and trading up more than 5%, but we're doing it on volume unlike any that we've seen all year, except perhaps the earnings-related volume that we saw back in December to the downside. So I think Costco here looks pretty good. Marvell, not so much. Now, it did still hold. It did go down, test that 50-day moving average and bounce. So I'm going to give them, the benefit of the doubt at this point because I do tend to have a bullish slant, as most of you probably know. But we are in an uptrend, and so I'm not going to write the stock off. I do believe, though, if Marvell goes back down and closes below $18, you lose the 50-day moving average. You lose the price support after the last big move up. You can see every time it dipped down to about this 18 level, buyers came in. Same thing happened today. Don't want to lose $18 on the close, so I would watch that level closely on Marvell. Now, what was the market telling us beforehand? Well, I mean, semiconductors were starting to show a little bit of strength, relative strength versus the S&P 500. Marvell was doing the same, mostly because it was just kind of going along for the ride with the semis. If you look at Marvell relative to semiconductors, we were downtrending, then we were kind of uptrending, and really for the last 6 or 7 weeks, just kind of been going sideways. So not been one of the better stocks in the semi space during this rally, and we can see a little bit why now. As far as their report goes, they did come out and warn They beat on their top line, by the way, 744 million versus 740 million. Missed, as I mentioned, on that slide, 25 cents versus 26 cents on their bottom line. They guided Q1 revenues and earnings per share lower. So there's your gap down, the sell-off. But again, we are bouncing off of that key area. So benefit of the doubt goes to the long side on Marvell, but I would not say the same thing if it closes below $18. OKTA, this is in that software space, and software has been hot. OKTA has been hot. Look at the stock, though, was down to $70 earlier, well below the 50-day. It has come back off of those lows, back up to 77. I'm not sure where this is going to finish the day, but if it finishes closer to the lows, that would be bearish for the stock. And if it can hold this 50-day moving average on the close after that early weakness, I think that would be very bullish because the volume, very strong, already over 6 million shares. And again, like Costco, we're not to the halfway point of the day yet. So this is looking like one of the best volume days of the year. So where we finish today matters on OKTA. I would be watching that. They beat on the top line, beat on the bottom line. This was an interesting guidance, though, they gave. They guided their next quarter and fiscal year 20 revenues higher, but they guided next quarter and fiscal year 20 earnings per share lower. So we're going to do more business, but we're not going to turn it into profits. And that, I don't know, maybe it's competition. Maybe it's, I'm not sure what it is, maybe pricing that they have to go through. So the revenues are higher, but the margins are not. I don't know. It's a little bit of a warning. Therefore, if we fail to hold that 50-day moving average, I'd be a little nervous with OKTA. MTN, a lot of good stuff going on here with Vail Resorts. Beat on the top line, 850 million versus 842 million. Beat on the bottom line, 502 versus 491. And then they approved a 20% increase in their quarterly dividend. So they are now going from $1.47 per quarter in dividend to $1.76. So they had a yield that was still, it wasn't bad. It was, I think it was 2.7, 2.8%. That now goes up to probably 3.25%. I don't know the exact number, but that's going to be a pretty nice little dividend on Vail Resorts. And you can see a lot of folks jumping in as a result. So really nice day. Looks like we might be ending this. We have completely filled that gap now from back in January, a close above it. I think kind of turns the corner here. Also, with the heaviest volume on this gap down, the heaviest volume on the chart, this now starting to look to me like an exhaustion gap. Stock went from $300 down to $180 in 4 months. With that final gap down, has now started to rebound. And with a beat on the top line, beat on the bottom line, and a raised dividend, 20% dividend increase. I think MTN looks a lot better here. Big Lots. Big number on the bottom line. Unfortunately, they just matched estimates on the top line. They guided their Q1 earnings per share lower, but the stock's rebounding, up more than 13% on the day. I would suggest that it's probably, well, it's already filled back to this prior low, which becomes resistance. So let me annotate that quickly. So if you look at this right here, that was the prior low. So here we are. We've gone up above that. If we come back down and finish near the low of the day, or even another 50 cents below where we are now, I'm going to be a little nervous that that might be the end in the short term as we hit this resistance level. Because again, those numbers weren't great. The bottom line was nice, but they're guiding lower in the next quarter. You could look at this and say, well, maybe some of it's built in. The stock went from 50 down to 26, almost half of its market cap lost prior to this. But still, the fact that they're guiding creates some concerns at least. And then one final stock I wanted to point out. This was a smaller software stock. And this is Upland. And the reason I wanted to point it out, it's just a really nice report. You can see the sideways consolidation in the breakout. Very heavy volume. Normally not a lot of volume in the stock, but today already over 1 million shares. Upland reported revenues of 45.2 million, beating the 43.5 million estimate. Bottom line, 58 cents versus 49 cents. And they guided Q1 and fiscal year 19 revenues higher. So beautiful move, up 17%. But I like stocks like this, and you get in a breakout. I think the top of this gap right here at about 30, well, today's open, 37.69. I believe that's going to serve as excellent support on the stock going forward. All right, Mary Ellen, I know we've had a lot of weakness in the market this week, and I talked earlier that consumer staples, real estate leading, and I know you wanted to spend a little bit of time talking about, looking for defensive areas of the market when we get into a time like this. What do you have for everybody?
Yeah, you bet. We are certainly in a bit of a tenuous situation with the broader markets. So I wanted to spend a couple of minutes just sharing with you how using stockcharts.com, you can very quickly get in front of some high quality, more defensive type of stocks. So what I'm doing here is accessing what's called the sector summary. This is from that initial page interface. And as Tom pointed out earlier, we can see today, and certainly given the action for this week, up here in the forefront. So we can also, of course, sort this by the 1 week performance, and it is bearing out this move into these more defensive areas. And also, Tom talked about yields and the Treasury, and those yields are dropping. So a lot of these defensive areas, in addition to being defensive, they're offering you a nice yield. So what I'm going to do from here is go ahead into the real estate sector fund. This has been a top performing area in the broader markets, and also benefiting from those lower yields, as well as the somewhat defensive nature of that some people may want to activate just to maybe hedge some of your growthier positions. So what we're looking at here is, again, a weekly sort. And within these REITs, I'm going to go ahead into some of these specialty REITs, because that's an area that can really be quite interesting. From here, what you will want to do, it's providing you with a list of those stocks in that specialty. These are going to specialize in different areas of the economy. And as I get into this, it'll make more sense. So what I would do initially is go ahead and sort it by scooter. This is your stock charts technical rating, very powerful tool. And then from here, we can just drill down. You can go ahead over the symbol and get a nice thumbnail shot. So let's go ahead and drill down. What I'm going to focus on are some of these medical related, healthcare related. CTRE is a very good example. We can go ahead and take a look. Of course, the stock is enjoying a nice day today, but it is emerging out of this nice base, and that's very constructive. The RSI is up above that 50, trending upward, and this company does provide, or they actually invest in senior housing, healthcare related properties. They offer a 3.5% yield, but take a look. This is from that bottom in December, how the stock has been doing well, as growth stocks also have been doing well. The outlook for a lot of these stocks, given the dynamics, a lot of baby boomers, aging population, a lot of these healthcare related REITs are really outpacing. So this is certainly a stellar stock that I would say take a look at. Let's take a look at another one that has a very high scooter rating. MPW is the ticker symbol, and this particular stock has a 5.5% yield. And we can see it's holding up. It's not quite as dynamic looking as that CTRE. We can see it's really just marking time at this juncture, which is putting this RSI into that net neutral area. But by and large, it is constructive looking. And we can also take a look at another area that is in these specialized REITs, and that's going to be telecommunications. I'm going to pull up AMT. This is American Tower, and this is a company that invests globally in telecommunications towers, and we've been seeing a big pickup in demand for space on these towers as we're seeing an increased use in mobile data. But let's take a look at the chart, and we can see the stock is, for the most part, finding support at this upward trending 10-day simple moving average. That's this green line. And your other moving averages are very much in an uptrend. Your RSI up above that 50 in positive territory, and your MACD is also constructive. And I'll just show you one last highly scooter rated REIT, specialty REIT. This is COLD, another one that is really in a very confirmed uptrend, support at this upward trending 10-day. Big volume here, came out with very good numbers. They do temperature controlled warehouses and a nice 2.5% yield. So that is giving you a feel for how you can get a little defensive, but also be in stocks that are in a confirmed uptrend, so that even if the broader markets find their footing, you can expect continued outperformance. So let's go ahead and move on to what's hot and what's not. And I think we alluded to the fact that there's not a whole lot that is hot this week, but there certainly are some, and a lot of it is earnings related. So the first area that we can take a look at are some of these retailers. Abercrombie and Fitch, ANF is the ticker symbol. Take a look at this gap up here on earnings. The stock is up 15% for the week. And when you see this big volume, a lot of times that's telling you institutions are in there. They want to own a piece of this stock. This is a stock that has had a very tough period for a tough time for a lengthy period, but this gap up, the company beat on earnings. They're closing a number of their stores, about 40 of their stores. They're redesigning, and they are recognizing the need to shift things to turn things around. Their digital sales are improving. We can see the RSI is up here above this 50, trending upward, and your MACD had that crossover, the black line up through the red. And so you can expect, should the markets find their footing, this stock should continue to power ahead. VIPS is another retailer, and this particular stock, it's a turnaround candidate. The reason for this move, and actually it's down about 4% today, so it's really given back a lot of its gains. It was attempting to turn around here. Strong buy recommendation popped the stock up above this downward trending 200-day simple moving average, and that is a very key component to a stock's potential turnaround. When these turnarounds, if they do fail, they will do so swiftly, and I think that's what we're seeing here as the stock drifts back below that 200-day simple moving average. Another earnings related is Dollar Tree. They beat on earnings and sales. Take a look. Now, this is a stock that had a very nice advance and pulled back very orderly to its upward trending 50-day simple moving average. And on Wednesday, they came out with very good numbers. They beat on earnings and sales. And the reason that you might be seeing more of an advance, take a look at that volume. I talked about institutions coming in. Oftentimes, it will take them several days to build a position. So you'll see an continued increase. The company also announced they're going to be closing 390 Dollar General stores. They bought Dollar General. I'm wondering if I have that right, but they are going to be closing 390 stores, which is another non-performing stores. The market likes that, and we can see the stock is continuing to advance. One last name in this retail space is Heavyweight Target, and they are giving back some of their gains today, so it's probably up only about 3% on the week. Blowout earnings report. They had a very strong holiday season. They guided higher for this year, and we can see that the stock did that. We talked about turnarounds and the price breaking up above that 200-day simple moving average. It is seemingly failing, so we're going to have to see how it behaves around here before we can get truly constructive. And I only have a minute here to review some biotech stocks. I'm just going to cover about two of them that are the most significant, and this one is ASND. And the company came out, they're up about 73% on the week. They had phase 3 results for a pediatric growth hormone that came out positive, and we can see this big volume here. One other name that we can look at, ARQK. Of course, a lot of these biotechs are going to move because of FDA approval, clinical trials that are performing well. QURE is another biotech stock, and we can see this big gap up here. Last week, actually, Roche bought a oncology or a genetic testing company called Once, and a number of these other genetic companies have been gapping up and bouncing because they have late-stage development therapies, and they could also be buyout candidates. So those are a couple of the bright spots on what's hot.
I got a question for you, though, Mary Ellen. Like on a stock like this, obviously it's been sideways consolidating for a while and then makes a gap up. I actually like that. But some of these stocks can be incredibly aggressive and risky. So how do you avoid taking too much risk getting into these stocks that have already made these big moves like this? Do you just make sure you keep small position sizes, or is there something else you do?
Yeah, so a lot of these biotech stocks are going to be quite volatile. So I do tend to stick with larger names. This is a $2 billion company, and sometimes it can be helpful to get a little bit more in the way of perspective. This is a weekly chart. So when I see a biotech company that has trended up nicely during prior periods, sells off, so it's behaving with the broader markets, it's going to be a bit of a steadier ship from my work. And now we've broken very nicely out of that base on volume. So yeah, I did cherry pick the names that had a little more in the way of, or less in the way of volatility.
Okay. All right, well, let's move on. Let's take a look at a couple of utilities and real estate stocks. First of all, if you take a look at the XLU, you can see that it has continued moving higher. So while the overall market has been going lower, it's not really that utilities or real estate have been going a lot higher. It's just that they're not being dragged down with the rest of the market. So you can see the XLU continuing to move higher. The XLRE is just kind of going sideways here as it tries to, I don't know, I always talk about these negative divergences, higher prices, lower PPO. You get these resets where the PPO works its way back down toward the center line. You can get that through selling or sideways consolidation. And I think right now the XLRE is simply consolidating. A few names I'll throw out here in these groups that I thought looked pretty good this past week. This is NiSource. You do have overhead resistance at 2750, but it has been making a move up toward that level. Close above 2750 would be a breakout. The stock definitely making a move towards there. ATO, Atmos Energy, already made the breakout. And over the course of the past couple of months, you can see all these pullbacks are holding the rising 20-day moving average. So ATO up for the week and looking pretty good on its chart. OGS, which is One Gas, breakout. Volume increased on this move to the upside, clearing the December high. We've continued to see more upward movement this week. Volume's a little suspect, but overall, I think the chart here looks pretty good. NEP, this is Next Era Energy Partners. Nice breakout here. I'd be looking for a pullback, maybe at least 75 cents to $1. Try and get closer to that 20-day moving average. In the real estate area, AAT, American Assets Trust, this has been one of the best movers. Really nice breakout over the prior highs. AAT looking pretty good. WPC, this is WP Carey and Company. Off of an uptrend, I see a cup forming here. Nice little move. Hammer on the bottom, starting to make a run back up here toward the right side of this cup. I think this stock looks good. CUZ, and then I'm going to have one more after this one. Here is CUZ, another one making a move. Look at the volume. Volume's been really nice on this move to the upside. So even though the market's been selling off here over the past week or so, you wouldn't know it by some of these utility and real estate stocks. Last one I'm going to mention, Washington REIT. WRE, huge gap up back a week ago, has pulled back. Actually, I think this pullback looks pretty good to me. I really like the uptrend that's been started. I love that test of the 20-day that held. Another one back here at the beginning of February. So I suspect as we get closer to the 20-day, we'll probably find some buyers on WRE. And I'm going to turn it back to you for some more hot stocks.
You bet. We're drilling down. These hot stocks that we are going to talk about now are interestingly in response. I'm going to review some consumer staple stocks. A couple of them do have yields, but the reason this is called Turning Point Brands. This is a tobacco company. We can see the stock is breaking or poised to break out of a very nice base. But the reason for their advance this week, this is a weekly price chart, is following the resignation of the FDA Commissioner Gottlieb. And a lot of these tobacco and marijuana stocks had nice pops. So this particular stock, we can see the RSI trending upward nicely. MACD had that black line up through the red in a positive fashion. Another tobacco stock that also has had a good week is the ticker symbol is MO. This is Altria Group. Not as constructive looking. We can see the stock has been dipping here as general tobacco use and cigarettes sales have diminished, but the stock is trying to reverse this downtrend. I talked about the need for it to break up above that 200-day, which is this blue line, simple moving average. We have had that positive MACD crossover, black line up through the red, but we want to come up above that 0 before turning positive. Your RSI has trended above neutral. So we have some signals that it could potentially turn, but it's going to have some overhead supply here that it's going to have to overcome before it can advance further. One last one, BTI in the tobacco space. This is British American. Another one where tobacco-related sales have dropped. It's attempting a reversal. This is a very bullish outside week, this candle, and it's continuing to advance. Again, we're going to need to see a little more, but it is certainly on its way to potentially turning. And then one last area, I can just spend a minute on this. This is going to be some of these housing related stocks. Tom talked earlier about housing starts coming in positively. Building permits are up. This is DHI, DH Horton, another one that is attempting to turn. It's up almost 5% this week. We can see RSI is trending positively. One last name that we can take a look at in the housing space is NVR. This one is a little more advanced as far as its potential turnaround. And I can go ahead and pull up a daily very quickly, and you can see it's a bit more advanced up above that 200-day with your other indicators in positive territory. And that is about it for what's hot.
All right. Well, we might as well take a look at some what's not. And I tell you what, there are some stocks that are not hot this week. And we'll certainly go over those with you. I'm going to start off with energy. And so if we first look at the industry groups, you're going to see pipelines, by the way, have been a very strong part of the energy space. So while a lot of the other areas of energy have been getting hit to the downside, and this is the 1 week industry look. Check out pipelines, only down 1%, but then you go down to oil equipment and services, down 8.19%. You got exploration and production down 6.65%. The renewables, which had been really hot this year, down 5%. So this is a group that has really been battered over the last week. First, I wanted to just pull up a chart on these groups so you can see what's going on. When you get above that 20-day moving average in an area of the market that has been badly lagging, I don't like it when it rolls back over. And you can see that this is a group that's been lagging badly, got nowhere near the highs that we saw back in October. The S&P 500 just went back and touched the October 17th reaction high. And yet you can see with oil equipment and services, they never got anywhere near those October highs. And now they're rolling over and underperforming again to the downside. This is a group I would continue to stay away from. It's not helping many of the energy stocks. That the dollar is breaking out. I think that's creating some headwinds as well. But just wanted to point out that the group, you've got to be careful. Exploration and production, not a whole lot better. Moving up, sideways consolidating. Now, not only are we back below that 20-day moving average, but we're threatening to break the low that was established back in the second week of February. And it looks like we're going to do so. So this is all bringing back those lows in December, possibly those lows in December, back into play. And then finally, let's look at the renewable energy. Whoops, that's the wrong one. I want to just see the chart. So if we pull up renewable energy, this is a group that's been very strong in 2019 and has outperformed. You can see there was the October high. We easily cleared that. So this has been a very strong part of the energy area, but still having a very rough week, although trying to bounce back today. So that's good news that we are at least seeing some recovery today. Getting back up above that 20-day moving average is job one there. Pipelines, on the other hand, this has been a group that has been doing extremely well, and this week really hasn't pulled back much. So hopefully by just looking at these charts, you can see where the relative strength is in energy. It is no doubt in pipelines and in the renewables. So this is the area of energy. If I was going to trade, these would be the ones that I'd be looking for on the long side. Now, if you're looking to short, then I think you could see the areas that were underperforming. Individual stocks, let's pull up a few names. Halliburton. I think the scooter on Halliburton's probably around 1. I mean, it's just awful. And I think the chart shows why. We did have a false breakout just a few weeks ago, trying to get through this 32 level. And you can see the reaction high back here in November and December, right between 32 and 33. Couldn't negotiate it, and now we're rolling back over, clearing the prior low. And look at the volume picking up. This is a clear sign of distribution, in my opinion. While Halliburton looked okay short term, kind of like gold. I was talking about how gold looked pretty good short term in 2019, but when it rolls over, you want to be out of it. I'd say the same thing about some of these energy names. Halliburton does not look good to me. NOV, this is National Oil Well Varco. Same thing. Big gap up in February, failed, couldn't hold that breakout, and now we're rolling back over to new 2-month lows and not far from the December lows that we saw. Oceaneering, OII, another one with a very rough week, actually the last couple weeks. And once again, volume was strong as we were breaking down below that February low. Not looking good. Today's candle, maybe we're going to get a little reprieve, but we're not to the end of the day yet, so we don't really know what that final candle is going to look like. Schlumberger, SLB, another one dropping. This is, of course, a big name, and never good to see one of the big high-profile companies within a group breaking down. Schlumberger doesn't look good. And the last one I have for you is Helmerich and Payne, HP. This one has just kind of been sideways, maybe a little bit down this week, but it is threatening to close at about a 7-week low. So this was one I thought I'd mention as well. Just not looking very good in the energy space this week, Mary Ellen.
All right. Well, I can certainly carry on here with some more as far as what's not hot this week. And the first area that we are going to go ahead and focus on is semiconductor stocks. What I have up here is the Philadelphia Semiconductor Index, SOXX, and we can see that it's down almost 4% for the week. And what I did want to point out here is, before getting into individual stocks, I'm going to pull up the daily of that very same chart. And this is that 200-day simple moving average. So a lot of these moving averages are going to either act as support. Your 10-day is acting as support, as semiconductor stocks had a very strong into March 1. The group was up 30%. So it's giving some of that back, certainly, but it is finding support. There are buyers coming in, maybe not so much. We are still down on the day, but let's go ahead and move on and take a look at some of the individual stocks within the semiconductors. And as we go through, I can certainly explain why these stocks are coming under a bit of pressure. This is Micron Technology, MU is the ticker symbol, and we can see that the stock, it's down 10% on the week. This drop here, 2 analysts came out and downgraded the stock. There's been weakness in memory chip pricing, which of course is going to affect their bottom line. Micron is a seller of these chips. And we can see that the RSI broke down below that net neutral 50 here. And just scrolling down a little, we had an earlier black line down through the red on that MACD. Now it's poised to drop below this net neutral 0. We want to see the stock find support. We're going to take a look at, see how it closes for the week, because a break below this red line, which is your 50-day simple moving average, would be quite negative. It's going to start trending and drawing some of your other simple moving averages downward in a negative fashion. A couple of other names we can take a look at here are some certainly bellwether names. This is Tower Semiconductor, TSEM. Nice turnaround attempt here on earnings, but it's given back. I talked about how a lot of times these turnarounds, if they fail, it will do so swiftly. And we are in fact seeing that. Now the stock is breaking back down below. Your RSI is negative and your MACD had that negative crossover, poised to go down. Let's take a look at VSH is the next ticker symbol, Vishay, and we can see another turnaround attempt that appears to be failing. The stock is down almost 10% for the week. Again, we're going to want to see it hold support here at the 50. Otherwise, it will have reversed that potential turnaround. AMD is the last one that we can look at here in these semiconductors. It's holding up a bit better, but it's still down over 8%. We can see this. This is a company that management came out with at the earnings release and spoke very highly about their second half 2019 prospects. But the stock, of course, is deteriorating with the industry group RSI trending down. We're looking at a daily price chart. MACD poised to cross down below that net neutral 0. Let's take a look. I'll go ahead and move on to a different area that is also coming under more than average selling pressure. That's the areas we can, of course, review any number of stocks stocks that are down this week, but I'm going to be focusing on those that are really getting hit quite hard. This is internet related. The company is called Grubhub. They are a food delivery service. Big winner back here in 2018 as the company came out with great earnings here, expanding through acquisition, but more recently, a poor earnings result, and they have totally fallen out of favor. The stock is down over 11%, breaking that key 50-day simple moving average. A lot of your trends are downward. It does appear to have more downside ahead of it. Another stock, this is one that we have highlighted over the last several weeks on the upside, but it's coming under some selling pressure. MEET, this is an online social media, social platform, and we can see the stock really had been holding in really quite well, but more recently this week, again, we are looking at a daily price chart. The company acquired another online social platform called Growler, and analysts think that the acquisition is going to hinder growth. They don't like it. RSI trending down. The interesting thing is we can see the stock broke below that 50. Take a look at that big volume. Buyers came in and supported it. So if we can close the week above that 50, we should be in good standing with MEET. And I can go ahead and move on because I do want to take a look at some of these communication stocks that had been the darling of the markets going into this week. And the first one is a very large bellwether. It's Ciena, CIEN is the ticker symbol. And if I can get that properly, we can be off to the races and take a look at it. And so you can see this nice progressive uptrend that the stock had been in. Now this is a bearish reversal and also bearish outside day candle where the stock initially, they came out with earnings, the stock rallied, and pre-market and into the open, not only did it give back, but it also lost more. And that's a very bearish indication that more downside is ahead. We also got big volume on that sell-off, and these are institutions, they are exiting the stock. So we are going to need to see it hold support here at this 50-day simple moving average, which is this red line. On the near term, we still have this RSI trending downward. Your MACD is also trending downward, but we can take a quick look at a weekly chart to give a little bit more in the way of perspective, and you can see just how much of a winning stock it had been going into the week. We're down over 9%. So again, longer term, we're still in good standing, but we are going to need to see that stock hold. We can take a look at one other stock in this communications space. LITE is the ticker symbol here. Now, this stock going into this week really didn't look positive. The estimates have been revised downward. This is a very sloppy chart. It's down almost 8%. They provide high capacity fiber, but it is not a stock that would interest me. So because given this inherent volatility and it's bouncing around, there certainly are other names that we can look at either on the long or short side. Let's go ahead and move on to some of these insurance stocks. It's been a really tough week for these healthcare providers, and a lot of that downside that is continuing into this week. It started last week when the Medicare for All bill was yet again reintroduced, and this time the potential threat took hold. So we're down another 9%. This is WCG, WellCare Health Partners. This is a weekly chart, so we can see on this weekly chart that your RSI trended downward and your MACD is now below that net neutral zero. Last week, I highlighted these stocks on the negative side, and I talked about analysts suggesting that it was overdone. There's no way that the Medicare for All bill will pass, and was suggesting being a buyer, but at that time, no, I would say no. You are going to need to see, you want to go back historically to other periods when the stock came out of a downtrend. What do you need to see as far as the characteristics? You are going to need to see the price breaking up above these simple moving averages, your RSI trending upward, and your MACD. So we are not quite there yet. We're not out of the woods. I'll go ahead and pull up a couple of these other healthcare insurers, and you can see that net neutral, a lot of them are getting hit. This is Humana, HUM. The stock's down over 8%, and it still looks to have more downside ahead with these indicators still heading south, if you will. One last name that we can look at in the healthcare provider space is CNC. This is Centene, a bit of a smaller one, but this is another one down 8% on the week. And it is just looks like it has more potential downside ahead. So would not be a bottom for sure.
I'm sorry to interrupt you, but while you're talking about the healthcare providers, there was one stock that I noticed has been tough, been struggling the last couple of weeks, but it's been a really good relative performer in the area. And that's Ensign Group, ENSG. And was wondering what you thought of that one. When you take a look at that, because it is still above its 50-day, when you see a really, really, really poor group like healthcare providers have been over the past, couple weeks.
Yeah, I think, well, this one is a little bit of a different, I think these guys do long-term health, but I agree with you that the stock is really holding in remarkably well, given the dynamics that are occurring not only within the insurers, but the hospitals, so a lot of healthcares in general. And so we can see this gap up there that took place last month, and I'm sure that may be earnings related. And so it is holding in really quite well, despite the drop off last week and this week. We're looking at a daily chart. That RSI is just at that net neutral. It's certainly not down and out like a lot of these other names. We did have a negative crossover on the MACD, but it's still up above that zero. So you're right that there are some potential pockets of strength, still not overall healthy. I'd like to see it, but yeah, very interesting.
Okay, I was just wondering because, that one is showing weakness like the overall group, but when you see sometimes weaknesses, I want to stay away from it. And then other times when you see weakness, it's like, well, you know what, this has been an outperformer. Maybe this is an opportunity. And that's kind of where I was coming from.
And you're absolutely right. That's something that I talk about a lot with my work. If you want to find the leadership names, generally speaking, they are going to be those stocks that are holding and up well and withstanding the broader market pressures. And with an eye toward once those pressures are relieved, those stocks will tend to be your better performers coming into that new uptrend in the broader markets. So yeah, good thinking. I have time for a couple more. Let's go ahead and take a look because retailers are beginning to trickle in with their numbers. They are the last generally to report earnings during earnings season. So here's a company, this is Burlington Stores. They came out with numbers yesterday and gapped down. So the stock's down about 16%. They had weak fourth quarter sales. Their earnings beat, but they guided lower on their revenue outlook for this year. So when we see this gap down, take a look at that volume. Now, the interesting thing is the stock did gap down as low as 140. Buyers came in to support it. So it did look interesting, like maybe today we could see a continuation of that support, but not the case. There's still significant selling here. And all this is, again, when we see this kind of volume, it's telling you that institutions want out. They are lowering their exposure to the stock. And this does appear to have more downside potentially ahead of it. Another couple of retailers here that we can look at, Restoration Hardware, getting hit with the broader markets because they are due to report earnings later this month. The stock's down about 8%, but I would view this more as a pullback because analysts are revising estimates up for this year and next. So it's more in line with the broader markets. It'll be very interesting to see how they come out with numbers. Another, what I view as a pullback is this Etsy. This is a platform that provides those that create products to sell their products. And the stock had very, very good earnings, gapped up. And it's interesting that we are seeing a little bit of buying today. Going into today, the stock was down around 7%. But again, I would view this as a pullback and a potential buying opportunity should we see strength in the broader markets. one last retailer that we can take a look at is Olli, O-L-L-I. The company has not reported earnings. They are due to report early next week. This is a discount retailer. A lot of times when you see other discounters such as Burlington fall, you will see in tandem other stocks also drop. And I'm going to go ahead and leave it at that so we can move on to the next segment.
All right, sounds good. I tell you what, that was a lot of stocks that I think we covered. We'll put that summary up and give you an idea of the different areas that we went over. And it was different this week for sure because we had so many up weeks. It was more difficult finding what's not hot, but this week we had no problems finding out what finding stocks.
I could have gone on for another 30 minutes.
Yes, we could have, but that's fine. Got through a bunch of them. All right, we're going to move over into the 10 in 10. And let's go ahead and start with the first pick of the day, which was, I believe it was Marathon Oil.
MRO, yes.
Okay, so let me go ahead and pull that one up for you. And there it is. Okay, I got some issues with Marathon Oil. I mean, it did break out. The good news is recently it broke out above prior highs with very nice volume and was starting to move higher. That's the good news. The bad news is it came back down, failed to hold its 20-day moving average. Is right now, I guess we're going to find out today whether or not it can hold this price support. But here's my problem with Marathon. And I went down here and annotated Marathon relative to its peers, and you can see that it had been downtrending, and it made this nice little rally back at the beginning of January, and that coincided with this big move right here. So that looked good. But when it broke out on an absolute basis, it did not break out versus its peers, and you can see it's starting to roll back over again. Now, the problem I have with this is if it fails to hold this breakout level, because broken price resistance becomes price support. If it doesn't hold that price support level, for me, I would bail. Now, the volume trends tell me, maybe it's going to, go back up, but because on a relative basis, it's not even it's underperforming its peers. And if it loses price support, it's in that energy group, which I believe is going to be facing headwinds going forward anyway with a stronger dollar. I'm going to say be very cautious. And if I was in it, I would be watching today. I think if it closes near the low of the day, I would be out. And if it can rally back toward the open, 1644 was the open. If it gets back up over, say, 1630, 1635, prints a hammer, holds on to that price support, maybe you give it another day and see if it can start to rally.
Very good. And then VRAY, VRAY.
Okay, so I guess this is the most popular. Actually, I don't have all the other data on this one, so let's just look at it on a regular chart. Yeah, it's in a gap resistance zone. So it's been downtrending, but on this rally, it's gotten back up to a key area of resistance. And I'm just going to take this little rectangle and draw this gap resistance in here. So this is where the stock had closed back on, that would have been what, November 8th, and then November 9th, it gaps down. Look at the volume. And so when it works back into this gap resistance zone, you really want to see it break out. And about 3 or 4 days ago, 5 days ago, we went right to the top of it, failed, came back down, so far holding the 20-day moving average. What I would say is as long as it can continue to trend higher and above the 20-day, I'd stick with it if I'm long. But I also am recognizing this gap resistance overhead. So if we fail, break down, especially if volume starts to pick up, I would probably exit the stock. So I think that we're squeezing right now in a range, and I would suspect probably over the next week or two, we're probably going to have our answer here.
Very good. The next one is cannabis stock. It's ACB.
Yeah, this is Aurora Cannabis. I kind of like this pattern, but we need to get the breakout. So it just keeps bumping its head up against this area of resistance. So here was your gap down. Here was your reaction high. And look, every time we get right up to this 820 level, how we back off. But we've got rising lows here. So we've got equal highs, rising lows off of an uptrend. pretty good volume trends. I would be interested on a breakout above 8.25. And I think even this 20-day test certainly makes sense where you can keep a fairly tight stop on ACB. So this is one that I kind of like right now.
Very good. And then UNH, take a look at.
Oh, that's one of our healthcare providers.
It is.
I can only imagine. Yeah, I think this one was down at support. Yeah, just kind of hovering. You know, when I look at a stock like this, one of the problems obviously is that it has been an underperformer recently. When you're all the way back down near the December low and the market is nowhere near the December low, I think that will tell you something. And the other thing is there's a lot of distribution going on. The reason I say that is it's heavy volume. You can't really have major distribution from larger institutions if volume is light. When volume is heavy and you're seeing the selling, especially these big red candles, to me, it's just telling me there's a lot of folks unloading this stock for some reason or another. Now, so far, it's holding support. But that doesn't give me a lot of comfort when I see big volume to the downside and such awful relative performance. So if I'm still in it, if I'm holding this, I'm going to continue to hold because I am so close to support. But if this support gives way, given the heavy volume selling, I would exit.
Very good. And then one of those defensive utility stocks, AES.
Right, AES. Yeah, other than a negative divergence, I mean, this one is one I probably could have included in the what's hot when we were going over those this area. Really nice stock. The only problem, again, for me is that it does have a negative divergence. So you've got higher prices coming across. I don't like that long tail and reversal yesterday with a little weakness today. But I think the combination of that with these lower readings on the PPO just tell me that the stock might be running into some slowing momentum issues. Now, on the flip side, so I'm going to argue with myself here, which I often do. There's a lot of volume that's been coming in on this move to the upside. So, on the one hand, price momentum, it's telling us that price momentum is slowing, but high volume setting a new high is not really indicative of slowing momentum. So it's a little bit of a battle taking place. But the reversing candle yesterday does scare me a bit. I would be looking maybe for some sideways consolidation here. And I wouldn't be surprised if we saw a move back down just below 17 to test these prior lows as the 50-day moving average comes up and as the PPO works its way back down toward the center line. That's what I would look for with the stock. Nothing horrible if I owned it. I wouldn't use this necessarily as a reason to sell, especially if you're longer term investor. Short term, yeah, you might be able to sell and get it 50 cents cheaper, but longer term, I still like the stock. I think it's performing well.
Very good. And then ANTM, be interested to hear your thoughts here.
Yeah, another one in that space. Actually, this is one that I like, believe it or not. This is another one that's kind of like that ENSG that I pointed out. It did gap up with earnings, and the thing is, right here, I can keep a fairly tight stop. I would probably even go down to yesterday's low and use that as an intraday stop. But as a short-term trader, again, this isn't one of my favorite areas of the market right now. But the fact that it has held support and is in a key area and it's in an uptrend. This is a stock that broke out back in January and February and is now pulled back with the overall group to test a key area of support. So if I was looking for a stock to get into in healthcare, it wouldn't be United Healthcare, which has been so weak on such high volume. It would probably be something like ANTM or ENSG, where we've seen relative strength, nice earnings, big move up, and now a pullback. It's like the baby being thrown out with the bathwater, healthcare selling off. So therefore, ANTM, we're going to sell it. But I think this is a key area around here between 286, 290, 291. I could make an argument to buy it here with a tight stop.
I like that. They're very entrenched already in the Medicare space, so they're wouldn't be as impacted. So good call. Okay, RARX, biotech.
Yep. Yeah, you like that until it goes back down, and then we both look like
we both hate it.
All right, RARX, beautiful move up here. Sideways consolidation. I think this is important because when you go from 11 to 24 in 2 months, you need to consolidate that move. If you just keep going straight up, the problem is getting in. There's so much risk. But by consolidating sideways for a period of time, I think this actually establishing a base gives this stock much more push to the upside, and I think it gives it a little bit more credibility on this move. So I like it. It is going to be a little bit more volatile. You got to, keep that in mind. And what I would probably be doing is waiting to see if this clears on today's close above this 23.75 area. If it doesn't and comes back down and has that tail up above it, I think you might be able to get this a little cheaper. I would say maybe 22 would be first entry on a pullback, and second entry would be the rising 20-day. I love the volume that's starting to pick back up here. Question is, are we going to get this breakout, or are we going to sideways consolidate a little bit more? And if we fail, I think that opens the door to a little bit of short-term selling. So I think this afternoon's action is going to be important on RARX.
Very good. And then another software stock, ADBE.
Oh, yeah, Adobe. Before I even get into this, I'm going to pull up the seasonality on Adobe because Adobe, we're in the seasonal sweet spot for Adobe, which is in the spring. Check out, heading into spring, February, March, April. Over the last 20 years, Adobe has averaged gaining 16%, a little over 16%, just in these 3 months. And you can see up here, the odds of Adobe going higher during these calendar months is stronger as well. So I just want to point that out before we even look at the chart, that we are in the sweet spot here for Adobe. So let's take a look at the next one, or we'll pull the chart up and see. All right, so given that, now, here is the problem with the negative divergence, and I think Adobe is playing out perfectly. I'm actually licking my chops here on this one because you've got higher prices, you've got lower PPO. What that normally means, slowing momentum, I'm going to look for a 50-day test. I'm going to look for a PPO centerline test, and I think we are getting close to both of those. So I actually think this is a good software company, very, very strong area of the market over the past several years on a relative basis. So if I can get this stock from 267 back down into the 240s, maybe 248, 249, I think that the reward to risk is starting to set up really nicely on Adobe. So I would be a buyer of Adobe.
And they are due to report next week. Side note.
Okay, so I would not buy Adobe. I would
Okay. BBD, Foreign Bank.
All right, BBD, another one with a negative divergence. I won't annotate it, but there's your higher price, slightly lower PPO, and now we've worked our way back down. So the question is, can it hold its key support levels? I would say, first of all, you've got pretty good support. Look at all the resistance here. As for 2 months trying to get through $9.90, $10. Finally got through, negative divergence. Now we're trending lower. I think the closer it gets to $10, and I'm not normally, kind of like Mary Ellen, I don't really generally like to buy below the 50-day moving average, but I do think that it'll probably find some buyers down here around this $10 level if it continues to move lower. So if I was looking to buy it, I would wait. I would either wait for a breakout above the moving averages, or I would let this thing continue to drift and potentially lock in closer to $10.
And the last one, RAMP.
Ramp, and I have a feeling I think this is a good stock from what I recall. Yeah, Axiom. Yes, it is. Look at this thing go.
Yeah.
Yeah, I'm going to pull this one up on a relative chart just so we have a good sense of what we're dealing with here. So this is the media agencies group, and you can see it hasn't broken out yet. Look at what Ramp is doing. It is breaking out. Here's the gap up. I'm almost positive that was earnings related, and it continues to move higher. This is why now a lot of folks don't like to buy these gap ups, and you get nervous because they've already gone up, but a lot of times that's the market's message that they're going up for a reason. And so I like the stock. I think that it is performing extremely well on a relative basis. Look at that relative to its peers. So its peers are trying to break out, and Ramp has already easily broken out relative to its peers, relative to the S&P. And if media agencies relative to the S&P 500 can make this break of this downtrend, then I think you've really got a great looking stock. So this is one that I like. Now, would I buy it today on a down day with the stock up 4.6%? Probably not, but this one would be on a list for sure. I would keep this on a chart list, and I would be watching it. I think a couple of areas, I don't know if we go all the way back down there. I think you've got gap support there, and then you've got very nice price support at about $51.5, $52. Now, with today's action, you might say, well, we're not going back down there, but Mary Ellen, you and I both know these stocks don't go up every day, and sometimes it's the emotion that makes you jump in.
Mm-hmm.
Right after you jump in, that's when you get that pullback down to the key support levels.
Yeah, that good old fear of missing out.
Yep, that's exactly right. So I like the stock a lot. I would hold off and see if I could get it a little bit cheaper.
Very good.
And there we go.
Had a couple of winners in there on a tough day.
Yeah, and it definitely been a tough day and tough week. But some of these stocks, you have to differentiate, I think, when you look at these companies when you get a pullback in the market. And we talked about a little bit when we were going over what's hot, what's not. But sometimes these moves down are very important. They're breaking support levels. They're rolling over. These are stocks that have been underperforming for months, and they're just continuing that underperformance. And then you have other ones that are getting dragged down with the overall market that have been great performers and can open up some great opportunities.
Absolutely, yeah.
We have to try to differentiate between those two. Okay, well, let's take a quick look at what is going on in the market, and then we're going to get into this final segment. I'm really excited to do this final segment. I thought it was a great idea, Mary Ellen.
Very good.
And we can see that the market is rolling back over again, and the Dow Jones currently down 182 points, the NASDAQ down 64, the S&P down almost 1%, down 25 points, and the Russell 2000 outperforming on a relative basis, but it was lagging badly earlier this week, so maybe playing a little relative catch-up, but still not looking good, down another 7.8 points, as you can see there. One thing I will say about the market when you get into these downtrends, and I'm going to pull up the S&P 500, and when you look at a 10-minute, 5-day chart, a lot of times you have these moves where you put in higher highs and higher lows throughout. And if you notice, we had weakness early back on Tuesday. Really, actually, through the first half of the day on Monday, we had weakness early on Tuesday, weakness early on Wednesday, Thursday. We get these rallies, these attempts at rallies, but they fail, and then we keep moving lower. We want to see this reverse before we get overly excited on the long side. And as I look back at the chart on the S&P, first of all, yesterday, all of our major indices closed back below the 20-day moving average. That is a short-term warning sign. Once we lose that level that has been holding throughout 2019, it's a little bit different ball game, and you have to be ready, prepared to exit positions if your stops call for it, because we don't want to get caught up in something that's much bigger to the downside. Now, I'm looking at the weekly 20-week moving average. This is going to be a pretty significant test for me. Unless we really have a big sell-off later today, it's going to hold for this week. Next week, intra-week, maybe we go below. What I'll be looking for is maybe some kind of a kick save where we come back up here and hold that 20-day moving average. That would make me feel a lot better about putting some cash to work. So I think there's some things that we want to keep in mind and watch. But no doubt that this week has done some technical damage. Now, the other thing I wanted to do is in my blog article, I used weekly RRGs to show you how some of the aggressive areas of the market have been performing relative to the S&P 500. So I thought what I'd do is maybe take a daily look. So let's take a look at these aggressive groups and zero in here on the 5 key groups. I'm going to switch this to a daily. And so we have 5, really the weakness has been this week, so 5 days. And so I've used 5 tails, or five trading days as the tail. And I could drag this way out, but you can see how messy this gets. The whole idea here is to see what's been going on during this downtrend. So during the uptrend, and actually let me max this out here. So during the uptrend, I think it's pretty clear that our aggressive stocks, for the most part, are staying over on this right side of the chart. And even when we weaken, we turn right back around and we go back up. Now, I'm not going to pull up the weekly, but we're seeing similar strength on the weekly. But as we continue to weaken, what we want to watch to see is whether all of these aggressive groups move to the left-hand side of the chart. Industrials are weakening. Technology actually holding up pretty well considering what's going on this week. We could, animate this, and you can kind of see just over the last few days, technology's hanging in pretty well. But industrials moving lower, communication services strengthening and trying to move into the leading quadrant, even though we're seeing some overall weakness this week. So I'm not viewing this too bearishly at this point, but I do think it's important to note that 20-day moving average violation. That's always something that gets my attention on the daily charts. All right, we are going to move into our final segment now, and this is this stock or that stock. And I think it's going to be fun. I'm going to give Mary Ellen a couple stocks. We'll take turns. She's going to give me a couple. I'll give her a couple. And we're going to go through and have to pick which stock we would own. So I'm going to start off by giving Mary Ellen her first two stocks. And by the way, these are the top two large cap scooter stocks. So these are both going to be good stocks. But which one do you like better, Mary Ellen? Xilinx or Cadence Design?
Oh my, okay.
So that's XLNX.
You bet. Okay, let's go ahead and start with XLNX. This is a stock that I'm very familiar with. It's been on the MEM Edge buy list. Prior to this big gap up here in earnings, this is a stock that is they are one of the few semiconductors that are really outpacing the broader markets. They provide chips into the 5G, 5th generation. We talked about telecommunications, big growth expectations for this stock. This was a huge number. They beat. Analysts continue to raise estimates. And this is what Tom was talking about, how you think you missed the move, but oftentimes not. Analysts will continue to raise. The price target's at about 140, the stock's at 120. But let's look at it technically. We can see that it is pulling back with the broader markets. This is a daily price chart. And what it is doing here is pulling back right to the top of this base here to 115. If it holds support there, that would be very constructive. The MACD is trending downward, but it's still above that net neutral zero. And your RSI is trending downward. We can see for really how long the stock was up here in this overbought position. So there certainly would be an anticipation. A lot of times people don't like when the markets pull back, but they really, in essence, are quite healthy because they give these stocks a chance to recharge. This is a look at the stock on the weekly, and this is still remaining in that overbought position. It could potentially pull back a little bit more, but I do like this stock. You picked a good one, Tom. Let's go ahead and take a look at the other large cap scooter, the top performing scooter. Is that correct? Yeah.
Yes, these are the top two right now.
Top two. Okay. Well, if I could go ahead and put in the ticker symbol properly. This is Cadence Design, and I have a feeling this is going to be another good looking chart. And it is. Oh my goodness. Take a look at this stock. Gap up, I'm sure, on earnings. Nice uptrending. It's finding support at this upward trending 10-day simple moving average, barely even pausing with the broader markets. Super strong. MACD just now poised for this negative crossover, but still in very good standing. I will tell you, I am going to take my bias with me, and of the two, I am going to go with XLNX. I really like just the fact that it is pulling back right into a buy zone. So when you see these stronger stocks pull back with the broader markets, it will, in my estimation, have a bit of a better chance of performing well once the markets turn. Okay. Get my little two thumbs out of the way. And we can take a look again at Xilinx, and we can also, there we are. So it is just pulling right back up to the top of this prior base here, making it attractive to me.
Yeah, I like both of them. I thought this was going to be a hard one for you when I looked at it. I really like the fact that Cadence, with all the selling this week, that stock has not pulled back, which is
unbelievable. That is constructive.
A lot of relative strength there. Okay, what do you got for me? I think you might have one for me.
I do. Oh my goodness, I'm just so we can take a look at eBay versus Amazon. These are two large cap internet retail plays, and I'd be interested in hearing which of those two you think might have better prospects.
All right. Well, the way I'm going to look at it is I'm going to look at it just on the relative chart. So first of all, we got eBay, which had been downtrending for quite a while. It has now been uptrending, losing the 20-day moving average, which short term, I'm a little concerned. Although I really believe if the stock gets back down into this 34, 35 area as the 50-day comes up from underneath, I believe you're going to see some buyers coming in because there's a lot of accumulation taking place in eBay since that gap up back in January. So when I look at it relative to its peers, it started to outperform, although it has come down a little bit here in the past week or two. It's been outperforming the S&P 500 for the past 3 or 4 months. So I actually think eBay looks pretty good. I like eBay. As far as Amazon goes, we all know Amazon's a great company, so there's no arguing that. But technically, I think it's challenged right now. It is back down near its 2-month low. And while some might view that as an opportunity, I look at it as underperformance. And so I'm not liking the way Amazon has been trading relative to its peers among the broadline retailers. I don't like the way it's performing versus the S&P 500. And it peaked relative to the S&P 500 about 6 months ago and has just never really gotten its feet back under it. So for me, I'm going with eBay. I think I like eBay over Amazon.
Very interesting. Yeah, that's eBay's been doing a lot of shifting so that they are working with some of these bigger retailers and helping them unload some of their inventory.
All right. Well, earlier I talked about pipelines, saying that that was the one area in energy that's been performing very well. So I've given you a couple stocks in that space: Kinder Morgan, KMI, and then also TRP. And so looking at pipelines. So
Sure.
which
Yeah.
one?
You bet. Let's take a look at KMI. And that, of course, is one of the better known names, Kinder Morgan, and another one that is really outpacing the broader markets here, barely just pulling back to that upward trending 10-day simple moving average. We're looking at a daily, and your RSI and MACD are both positive. And then the other TRP is the ticker symbol for the other TransCanada, the other pipeline stock that is pulling broke down below that 10-day, but is finding buyers. And so on the pullback. So they both are very, very constructive looking. What I like to do too is very quickly, I'll pull up a weekly chart just to give a little bit more in the way of perspective. And we can see that this stock is poised to break out of a very long-term base, which of course can be very, very constructive. We can take a look at KMI on the weekly, and this stock already has broken out of this base and it's poised to break out of a longer term. RSI is positive, as is your MACD, and I'm going to go with KMI. It just appears to have less in the way of potential overhead supply, more room to run, if you will. Yeah.
Okay. Yeah, I agree with that one. I like KMI as well, if I had to pick between the two. All right.
Okay.
For me, what do you got?
Well, a couple of names in the software security space: Palo Alto, PANW, or Checkpoint, CHKP.
All right. Well, let's start with PANW. First of all, huge gap up with very, very strong volume. This was earnings related. Now, it did not continue higher after that gap up. So that usually is a sign to me that we're probably going to see some more selling. And it hasn't helped that the market's been weak this week. But it has come back down to an area at the 20-day moving average, which I really like. It's really close to gap support. And this seems to be where it is holding, even though the market has continued to sell off. So I think we're starting to see a little bit of relative strength again in Palo Alto, even though it is coming off of this selling. When it came out with earnings, it was at 260. Now it's at 234. That's a 10% haircut. Call me crazy, but I like buying stocks 10% cheaper. And everyone else did when the earnings came out. So I have the same data now that everyone else had, but by waiting, I can get the stock 10% cheaper. So I really like PNAW. As far as Checkpoint goes, CHKP, this is another strong one. Okay, you're going to make it tough on me. Let's see. Software's broken out. It's in a great group. When I look down, obviously software's been a great area of the market. Checkpoint's been outperforming the S&P. Checkpoint, though, relative to the software space, it's kind of like just going along for the ride. So, yes, it's been strong. This one actually has come back down below the 20-day. I don't know that it's got nearly the support that PANW has. So I'm going to say, looking at both of these, I would go with PANW. I think I like that chart better because I've got definable area of support here. I love the volume here. Look at the volume on the move up versus CHKP, Checkpoint. You see the difference? I mean, the volume is good here as it breaks this downtrend, but I can't even tell what day it reported earnings based on the volumes. So I'm going to go with PANW. What do you think of that pick?
I think it's a great pick, and being familiar with that space, PANW, the growth prospects are much bigger, so that's going to help support it as well. So yeah, I agree.
All right, I got another tough one for you.
Oh boy, okay.
Yep, I got a really good one for you. So small caps, Fluent, FLNT, or Tandem, TNDM, and these are really strong.
Oh, nuts. Yeah, you are going to make this hard.
I am.
Very difficult. Okay, let's take a look at FLNT, and we can see the stock is another name that is just ignoring the broader market pressures, continuing to scale its way higher, finding support at this upward trending 10-day simple moving average, RSI, remaining positive, no overhead supply to speak of. Your MACD is very much in positive territory. Gosh, can't not like this stock. The only for me, I do tend to traffic in higher price. This is a $5 stock. I like to be in the higher price stocks because institutions will travel and traffic in those stocks as well. That would be, I'm really searching here for potential downtrends, but I mean, possible negatives. But let's take a quick look at Tandem. And this is another stock that I'm very familiar with, a big winner, up 1,500% last year, big winner. Really just sold off. This is a gap up on the earnings as the stock really just consolidated. And this gap up, it caused the stock to break out of a 5-month base. Huge volume here. And the stock is really just pulling back barely, and it's finding buyers today. My easy winner is TNDM, Tandem.
Wow. Okay. I actually like this one too. I will say I love stocks that are in uptrends and then go through these extended bases like this and break out again with big volume. I think that is a continuation gap, and I would certainly suspect that it goes higher. What I find interesting, though, Mary Ellen, I don't know if you have any comments on this, it's in the healthcare area.
Right.
It's been getting hit so hard. So
this is actually medical products and potentially not quite as impacted. There's if Medicare comes through or not, these products are still going to be supported. In fact, Medicare, oh my gosh, I have to remember the statistics, but they're a huge part of GDP, the federal government's spending on healthcare, and they do support these, like this is a Tandem diabetic care, so they have products relating to that. So I think the growth prospects are great.
Okay, awesome. All right, we got time maybe for one more. So you got one more for me?
I do, and these are Semiconductors, KLAC. Right. Versus, and that's KLA10 core versus LRCX, and that's Lam Research.
Okay. All right. Well, let's see. Well, I can tell you right now, the fact that KLA10 core is back and challenging a potential breakout, given the semis and where they stand relative to where they were back in June, is a pretty good sign. KLA10 core, I love that. I also love the volume that's come in here. So I can say without question that KLAC would be one of my favorites within semiconductors, period. So LRCX is going to have some work to do here. I love the breakout KLA relative to the semiconductors. You can see that. And the reason that I use this is that when you get money coming into a group like semiconductors, the money then will be split into all these different components. And when you look at KLA and you see the fact that more and more of the money within semiconductors is rolling into that stock, it's telling me that analysts have been out to the companies. They like what they hear. They're going back. They're buying the stock for their clients. And we probably have not heard the good news coming out of KLA over the next few months. I suspect that probably next quarter we'll have a blowout quarter, and I believe that KLA is going to be breaking out above these highs fairly soon. I think the pullback to the 20-day is constructive. So there's a lot of things I really like about this chart. So with having said that, LRCX, you better blow one out of the park here. And I can tell already that it's not. I do like the big volume gap up. I think that is a change in character here. We did fail to hold the 20, so I think the 50-day and then, of course, gap support. 161-ish and then maybe 150 is going to be two really key areas of support. But you can just look at this over the last 2 or 3 weeks with the semiconductor group pulling back. Look at what LRCX is doing, and then look at, excuse me, what KLA's done. Much better looking chart, in my opinion. So I think we got a couple of pretty good stocks, but I think clearly KLA 10 core would be my pick here.
Very good.
All right, and let's pull up a summary. I don't know. Hopefully you all had fun with that, and maybe you agreed with us, maybe you didn't, but I guess we'll find out in time. And there it was. So that was fun. We'll have to do that.
Very good.
Yeah, thank you so much for coming up with that idea.
Of course.
Now we have one other thing to do before we wrap up, and that is to bring up the poll for today. Now, there were a number of stocks, obviously, that have had great years so far, but here are 5 that have had tremendous starts to 2019. And so the question was whether or not you could name the one with the best year-to-date return. And the winner is...
Drum roll.
PYX.
Ooh.
Already has it.
Very good.
Yeah. All of them. I think the worst one on this list is up like 60% this year.
Oh my gosh.
And that might be Skechers. I'm not sure.
Yeah, and I'm actually familiar with that PYX. They changed their name back in September from Alliance One. They're a tobacco company, but it was established in the 1800s, and they're converting into the marijuana industry. So,
well, I'm going to have, I don't know if you can do this within 1 minute, but of these 5, is there one that you know, based on your analysis, what you know, is there one that really stands out that you like going forward?
Well, that Skechers is a nice turnaround. They had a gap up on earnings, but otherwise, that PYX still looks to potentially have legs. I don't have a favorite.
You don't have a favorite?
I'm not super familiar with every one of these names, but they do seem to be a lot of turnaround candidates that had these huge gaps up on earnings. And as long as they can continue to find support, yeah, there's that Skechers.
Yeah, I like Skechers. I really, this is the one that I think I would pick if I had to own going forward. I know that they came out with strong earnings. This is also a company that if you look back over the last year, see how it mostly had been down, trending down. I think we had a character change with that gap up. And the other thing I like is the stock was trading over 34 a week ago. Now I can get it down close to 32. And I know support is between about 31 and a quarter and $32. So all in all, and footwear, by the way, has been one of the best performing areas of the market.
It has, yeah. You can even look at Nike, and analysts are raising estimates for Skechers as well following that report. So it should continue to be supported.
Yep. So there's SKX. Of course, one last chart we'll look at real quick, PYX. Coming back down to the 20-day, you can maybe manage your manage your risk because it is on the 20-day moving average. So maybe it continues, but I don't think the overall longer-term chart looks nearly as good. Okay, upcoming schedule. You can see it right there on your screen. I want to thank everybody for joining us today. A special thank you to Mary Ellen for joining again on Friday, as always. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend. Be safe out there, and we will see you back here on Monday. Happy trading.